Friday, August 26, 2016. Monaco 64 here, home of alternative economics and contrarian views. Just like to update my viewers on the markets. We've just had the speech by Janet Yellen came out about half an hour ago. She started speaking at Jackson Hole, Wyoming at the Kansas City Fed Central Banking Symposium. And initially, the market reacted quite negatively. The stock market, it dropped to almost unchanged. I think it was up about 70 on the day, the Dow. Treasury yield spiked. Gold dumped to around 1320. It was trading around 1330. The main thing that made the market do that initially was a comment by Yellen, and I quote, she says, "The rate hike case has strengthened in recent months." So that's one of the reasons why the market took it as being hawkish. But then Janet Yellen also said that future policymakers, and I quote this, future policymakers may wish to explore the possibility of purchasing a broader range of assets. Basically saying that, you know, future chairman of the Fed or chairwomen of the Fed should explore buying, you know, doing QE with more than just mortgage-backed securities in the U.S. Treasuries. You know, opening the door, you know, for other assets like corporate bonds, like they're doing in Europe. And the reason why she said future, you know, policymakers is because her term as a member of the board ends next year. She started in 2010 as a member of the board, and it's a 7-year term, so it has to be renewed. She has been chairwoman of the board of governors since 2014, but as a member of the board, she's got a 7-year term. So that's why she said that, and it looks like the market digested all that, and it's actually reversed all the initial move. So actually the Dow now is up 105 points. Gold rebounded and got up to 1342. Silver got up above 19 at 1908. We're now 1894, still up 40 cents. Gold right now is 1337, up 15. So yeah, it looks like the market is taking this not as so hawkish. It's just the same usual story. You know, they keep threatening, oh yeah, the economy is improving, you know, we will hike, and then you get bad numbers and then the market, you know, falls back. And I'd just like to look also at U.S. Treasuries. Yeah, the 10-year yield is actually down today. You know, it spiked higher. And let's see, the 10-year yield right now is down 3 basis points at 154. So, and the curve is continuing to flatten. The 2s, 10s is now, let's see, 23. It's about 77 basis points. I made a video about a few months ago when the 2s, 10s, the yield spread between the 2-year and the 10-year was around 95, and now it's around 77. All that means is that, you know, people, investors are not seeing too much strength in the economy, and that's why they're, you know, buying longer-term treasuries. It could be as well foreign demand because, you know, 10-year yields in Europe and Japan are so low, but I also think it's a sign of economic weakness. And talking about economic weakness, we had some data today, GDP for the second quarter, preliminary GDP, which is the first revision, came out as expected at 1.1%. So it was revised down from the advanced number of 1.2. So that's pretty weak. The Michigan consumer sentiment numbers, University of Michigan consumer sentiment number, came out at 89.8, was expected at 90.6. Michigan consumer expectations came out at 78.7. and it was expected 81. These University of Michigan data are quite important. So there you have it. More talk and no action from the Fed. That's my view. And, you know, the stock market seems to like it, and we'll have to see. So just a quick update. I expect the markets to remain fairly volatile. So if you enjoy my quick market update and my videos in general, please like, share, and subscribe. You can also donate to my channel via PayPal or through Bitcoin or Patreon. There's a few links below with all the details in the description. Thanks, bye.